Welcome, everyone, to this deep dive. If you're looking to get smart about retirement planning, and pretty quickly, you're in the right place.
That's the goal.
Today, we're going to dig into the JourneyMark Fixed Index Annuity. It's from Integrity Life Insurance Company, and you'd find it through Diversified Insurance Brokers.
Right.
Our mission really is to understand its key features, see if it might be a useful tool for building a secure retirement strategy.
Makes sense. It's got different options to consider.
Yeah, I saw that. It mentions 10, 7, and even 5-year surrender charge options right off the bat. So flexibility seems to be part of the picture.
Definitely. That choice and duration is important for matching it to someone's timeline.
So what's the core idea behind JourneyMark? What's it trying to achieve?
Well, think of it mainly as an accumulation-focused annuity. It's designed to help your savings grow,
Okay, growth.
but it also builds in ways to access your money liquidity and provide some long-term protection, too.
So it's trying to find that balance between growth potential and safety.
Exactly. That sweet spot that people often look for, especially as they get closer to retirement or maybe are already in it.
Okay, so it's not just going to sit there like money in a savings account. How does it actually, grow?
Good question. With JourneyMark, you get access to different ways your money can earn interest. There are index crediting strategies.
Index crediting, so linked to the market somehow.
Yes, linked to the performance of a market index. So you have potential for upside based on how the market does. But this is crucial. There's a 0% floor.
0% floor, meaning?
Meaning even if the index goes down, your account value tied to that strategy won't lose money due to that index drop. You just wouldn't get credited interest for that period.
Okay. So you can gain, but you can't lose based on the index performance itself.
Precisely. And any gains you do get are locked in each year. They become part of your principal for the next year.
Locked in annually. That sounds like it adds stability.
It does. It protects your previous gains. You also have fixed interest options, too, if you prefer a set rate for a period.
Right. Okay, protection from loss is a big deal. Now, what about getting to my money? Liquidity.
Standard feature is pretty common. After the first contract year, you can typically withdraw up to 5% of your account value each year without surrender charges or MVA.
5%. Okay.
But they offer an optional rider, the Cascade rider, that enhances this. It bumps that penalty-free withdrawal amount up to 10% annually.
10% with the Cascade rider. That's quite a bit more access.
It is. And that rider also adds a couple of other interesting things. You can potentially get your entire initial premium back after just 3 years, penalty-free.
The whole premium back after 3 years.
Under specific conditions with that rider, yes. And it also includes something called a guaranteed minimum account value, or GMAV, boost at the end of the surrender period.
A boost. So extra value. This Cascade rider sounds like it's really focused on enhancing access and maybe giving some guarantees back sooner.
That's a good way to put it. It's for people who might prioritize having more access to their funds.
Got it. Now, I think I saw something about a premium bonus. Was that specific to one option?
Yes, good catch. For the 10-year surrender charge version of JourneyMark, there's currently a 6.5% premium bonus added up front.
6.5%. That's a nice bump.
It is, but keep in mind, it vests over that 10-year period, meaning you gradually own it fully over the 10 years. It rewards that longer-term commitment.
Okay, vesting over 10 years makes sense for a longer-term product. Now, shifting gears a bit, retirement income, that's the goal for so many people. How does JourneyMark address that?
Right. If guaranteed income is the primary goal, there's another optional rider called the Expanse rider.
Expanse riders, okay.
This provides a guaranteed lifetime withdrawal benefit, often called a GLWB. It's designed to give you a predictable income stream you can't outlive.
A guaranteed stream. How does that work? How's the income calculated?
Well, first, when you add the rider, they apply a 10% bonus to your initial benefit base. That benefit base is the value used to calculate your future lifetime income payments.
10% bonus on the benefit base.
Yeah.
Right at the start. Okay.
And then here's a really interesting part. That benefit base can grow each year. It increases by 200% of the interest rate credited to your annuity's account value.
Whoa, wait. 200%. So if the annuity is credited, say, 4% interest in a year.
Your benefit base for future income calculation could potentially grow by 8% that year, 200% of 4%. And this potential growth can happen for up to 15 years or until you start income.
That seems significant. That's growth on the income base separate from the actual account value.
Exactly. It's designed to potentially boost your future income potential significantly, especially if you let it grow for a while before starting withdrawals.
And you can choose level income or potentially increasing payments.
Yeah.
Cover a spouse.
Yes, options for level or increasing payments, and spousal coverage is available too. Provides flexibility there.
And I think I saw something called an income doubler. What's that?
Yes, also part of the expanse rider. If you meet the qualifications for a chronic illness, as defined in the contract, your guaranteed lifetime income payments can actually double for a period.
Double. Wow. That's a potentially huge benefit if you face significant health issues later on.
It's a powerful feature for addressing potential long-term care costs or other increased expenses due to chronic illness.
Okay. What about the death benefit? What happens if the annuity owner passes away?
JourneyMark includes a standard guaranteed death benefit, which is generally the account value paid to beneficiaries.
Right.
And if you have that expanse rider for income, but you haven't started taking income payments yet, there's an enhanced death benefit option available too.
Gotcha. Are there any other sort of smaller features worth mentioning? Waivers or anything?
Yes, there are typically waivers for withdrawal charges and any market value adjustment if you're confined to a qualified nursing home or diagnosed with a terminal illness, subject to contract terms.
Okay. That provides some peace of mind for unexpected events.
And for qualified contracts, like IRAs, they often have provisions related to required minimum distributions, RMDs, potentially waiving withdrawal charges for those amounts, adds some flexibility for managing taxes.
So it really sounds like there are quite a few moving parts and choices. The base annuity, the cascade rider for liquidity, the expanse rider for income.
Exactly. It's not one size fits all. That's why working with someone like the folks at Diversified Insurance Brokers is important. They help you sort through it.
Right, to figure out which configuration base, cascade, or expanse aligns best with your specific retirement timeline, your goals, your financial priorities.
Precisely. It's about customizing it to fit the individual's needs.
Okay, so wrapping this up. The big picture here seems to be that JourneyMark offers a spectrum of options. You can lean towards growth with downside protection, enhance your access to funds, or build a guaranteed lifetime income stream.
That sums it up well. It provides levers you can pull depending on what's most important for your retirement.
All right, so here's something for our listeners to think about. When you consider your own retirement picture right now, your timeline, your biggest concerns, which of these aspects resonates most? Is the growth potential with that 0% floor safety net? Is it having more access to your money sooner with something like the Cascade Rider? Or is it locking in a dependable, potentially growing lifetime income with the Expanse Rider? Thinking about that might help you decide if exploring these different rider options is a valuable next step in your planning.
A great question to ponder.
And that's our deep dive